Hi guys, welcome back to today's deep dive on 3 defensive stocks that do well in good times and bad times as well, right? Okay, so we are shifting our focus a little bit to give you true value that in the long term, if you look at what we share with you, you can actually benefit by making more profits in the markets, right? So do like and our video and subscribe to our channel as well, right? Okay, so just before I dive right into these 3 defensive stocks, right, and why they can do well fundamentally and technically as well, right? Just a quick introduction about myself. I'm a full-time trader and I have more than 20 over years of experience trading the different markets, financial markets, whether it's stocks or even forex or even options, right? Or even indices like futures, right? And I work with over 20,000 traders from all over the world, and I'm the founder of the Winning Trader and author of the book Trading Secrets, like what you see on your screen here, right? Okay, so if you want to get a free copy of my book, you can actually attend a free workshop where I share with you my strategy and how I actually trade for consistent profits as a full-time trader, right? Okay, and you will be able to learn the strategy as well in this free workshop, right? So the link to register for that is on your screen, right? Without further ado, let's jump in to share with you first. What are defensive stocks, right? Okay, defensive stocks provide steady income and growth even when the market drop, right? They focus on everyday needs like food, payment, or health. So demand stays strong through time, right? Whether tough time or good time or bad times, their demand is still high, right? And because their demand is still high, their stocks are very defensive, right? When market crash or have a correction, they don't go down that much, right? And when market goes up, they also goes up together as well, right? Okay, why they shine in good times and bad? Because people will still buy groceries, medicine in recession, right? Keeping their sales reliable. Plus, they often pay reliable dividends like clockwork income, right? Okay, so you can see over here between cynicals and defensive, right? Okay, so defensive typically are a way to have capital preservation, right? Okay, and safety as well, right? Okay, so there are a lot of defensive stocks, right? I picked 3 of them that is quite stable and solid as well, right? Okay, these stocks lead in essential sectors like food and beverage for PEP, right? PepsiCo, and payment gateway like Visa, right? And also healthcare like J&J, right? Each of them have proven records with 50 years of dividends highs and low volatility, which ties them together with strong cash flow, funds growth, and payout, right? No matter the economy, right? Okay, and they are also rated as top buy for a lot buy and hold by a lot of experts out there, right? Okay, but let's look at the fundamental why they are so good to accumulate, right? In the for long-term portfolio management and also for your long-term investing as well, right? Okay, so for PepsiCo, right, it's an everyday essential that sells forever, right? It makes snacks, drinks that everyone often uses and consume, right? Okay, like Pepsi and Lay's chips, right? The demand for that never fades, right? Even when there is a recession, people still need to drink, right? Okay, and this year alone, right, 2025, it outperformed rivals like Coke by 6% in the last month, right? Okay, and why is it defensive? Because its global reach is 200 plus countries and it ensures stability, right? Okay, because of its product is sold over 200 plus countries, right? Any country that have slowed down doesn't affect their overall portfolio as their overall growth or revenue as well, right? Okay. Another one is Visa, right? Why Visa is because Visa basically powers 65% of US card payment, right? From coffee to cars to any essentials in any economy, right? Okay. As long as there's a transaction using the plastic card, right? Visa, they make some money, right? Okay. And in 2025, they gain 10%, right, year to date, right? And when they have a drawdown, it's a very low drawdown, right? Okay, even when market dips, right? Okay, why is it defensive? There's no inventory risk, just network fees that grow with spending, right? Or as more people spend, they make the transaction fee, right? So it's very stable, very safe for them. And another one is Johnson & Johnson, right? Fundamentally, it delivers must-have medications and devices, right? For cancer treatment, for a lot of other treatments as well, right? Healthcare is something that doesn't stop, right? Okay, every human being needs some healthcare products or needs as well, right? And you can see why J&J, their sales rise 3 to 5% in recession, right? And even more in non-recession periods, right? Okay, 2025, their stock price surged 41% year to date, right? Hitting a new high of near $210 per share, right? Okay, it's defensive. Why? Because it has it's very diversified, right? Across pharmaceutical, pharmacy, or even devices that can actually help it weather any short-term or long-term downturn as well, right? Okay, so it's quite a big company, right? Which have his hands in a lot of other areas like drugs, medicine, and everything else, right? Okay, that is healthcare. And because of that, let's take a look at how the three of them stack, right? Okay, for PepsiCo PEP, right, steady climber 0.3% year to date improvement in terms of stock price, and Visa is up 10% and J&J is up 41%, all beating the S&P volatility, right? In bad times like Q1 dips, right, this year, they fell just 2 to 5% versus the market drop of more than 10%. So this is the reason why they are very defensive. Even when market is down, right, okay, the overall market is down 10%, they are only down 2 to 5%, right? Okay, and their dividend reliability is there, right? All three high payouts in 2025 yield totally 3 to 4% yields in terms of dividends, right? Okay, their combined power lowers risk by 15 to 20% while matching bull market highs as well, right? So when market is rising up, they are also rising as well, right? Okay, but sometimes when defensive stock, they are not rising as fast as those others stocks that is more volatile, right? Okay, typically defensive stock are slightly more of lower volatility, which doesn't react too much to market correction or rally as well. So which is very good in terms it is very a steady climber, right? All of them are steady climber. They improve or increase in stock price as time goes by, right? Okay, but of course these are just the fundamental reasons why they are good as a defensive stock that you can consider to put in your portfolio to make your portfolio more stable, right? More consistent in terms of generating revenue year after year, or generating profits or incomes year after year for yourself, right? Okay, but having said that, I'm going to dive into the technicals on these three stocks using my trade to win proprietary strategy. You cannot find this strategy anywhere. I'm going to use this strategy to look at the charts and share with you what I think are the price point to get in, right? Is it good to get in now for all these three stocks, right? Okay, so let's jump right in over here. Over here at over here. So the first one is PEP, right? Okay, so you can see long-term wise, since 2010 at a price of roughly $60, it has ran up to almost close to $200 by May 2023, right? Okay, but what I'm trying to show you here, since 2010, you can see it is steadily going up with very small corrections along the way, except until 2023, right? Okay, this is the one of the most long drawn correction since 2023 until now, this year, right? Roughly June 2025. And it started rebounding, right? It started rebounding. I would say for PepsiCo, right, there is a high probability that it might break 160, $100 and 60 $160 in the very short term, right? There's a high probability to do that, right? And in the longer term, it might just go to 170 to 180 or higher in the longer term, in the months or weeks ahead, in the future, right? Okay. But in the very short term, this 1-2 months, right, there is a high probability that it might just break above 160. And going forward, right, we could even see 170, 180, or even 190, right, in the months or even a few years ahead in the future, right? Okay, so don't take note of that. I think it is P. You can see very steady, right? Always going higher after a correction, and even though for the past 2 decades, right, it has never had such a long drawn 2 years kind of correction, almost 2 years kind of correction. I think it's almost over for it to really surge up to eventually 180 to 190, right, in the months or a few years to come, right? So that's for PEP. The next one is V, right? Okay, Visa, right? Okay, so Visa is also very steady, right? Okay, from about $19 after a stock split, right? Okay, now it went to 366, right? Okay, and you can see after a correction, it still steadily move up. This is very steady stock. Small correction, move up higher. Small correction, move up higher. Currently, it is in a bit of a correction for almost half a year, right? I feel it's very normal, right? There was a correction way back in 2021, right? That lasted for about 1 year plus a bit, right? 1 year plus a bit. So this could be the case. But what my point here is, in this case, right, even though it corrected, it didn't correct much, right? And after that, the move up was very steady and very strong as well, much bigger than the correction. So correction like this on Visa, right, should be taken as an opportunity to find a good price point to get in, right? Okay, so what are the good price point to get in? Could it be a correction like this lasting 1 to 2 years, right? Okay, and now it's only a correction of just 6 months. So if we look at the longer term time frame, like the 4-month time frame, yes, correction is long overdue, right? But I suspect that even though because like I say again over here, even if it goes to 280 to 300, I think that is roughly the price point, the lowest it can go in terms of a correction before a strong move up again, like what we see here is going to happen, right? Okay, so these are the price points, right? Okay, but the important thing to know here is that will it ever go much higher? Will the business still generate good profits, right, and stable income for them, right? So if the answer is yes to you, right, to me is a yes to me as well. At the same time, the technical chart looks really, really good for it to go much higher, to break above 380 eventually in the longer term, right? Okay, so I'm looking forward for Visa to break new highs in the years ahead, right? Okay, and I'm looking forward to accumulate while it is having a correction, right? Okay, so that's for Visa, right? Another one, but of course, compared with Visa and PepsiCo, I think PepsiCo has a better price point accumulation right now at this stage compared with Visa at this stage, right? Okay, so if we were to look at where is it? If we were to look at J&J, right? Okay, J&J has surged up a lot, right? Okay, J&J has surged up a lot, and this out of the 3 stocks, right, it might not be prudent to start buying into J&J right here, right now, compared with the three stocks, right? Okay, the first choice I will go into might be PEP because it's offering a very good price point after a long drawn correction and starting to rebound. And second choice might be Visa, right? To get in immediately. Third choice might be J&J, and very likely because J&J in the past few months this year, it has surged up so much, especially when it is a defensive stock. I'm reluctant to get in right here, right now, right? Okay, so I might want to wait for it to correct a little and see from here. Yes, it is still a very stable stock, right? Okay, especially over here, it corrected for almost 2 years, then start bouncing up very strongly over here, right? Okay, and because it's very low volatility, this move is considered very strong for low volatile stock, defensive stock like J&J, right? Okay, so you can see in the past, it doesn't have moved like this in the recent past few months, right? Okay, and because of that, like I say again, this right now at this price point, I'm very reluctant. In fact, I definitely will not get in immediately. I want to wait for a correction. That means I want to wait for the stock to take a breather, right? Okay, and come back down a little bit, all the way from current price of 210, right? Back to that's all from me from these three stocks, right? Okay, and like I say again, these three stocks are stocks that I feel like they might even do well even in a recession, right? So do consider them. If you want to have more stock picks from me, right? Okay, then do join our Telegram channel for daily market updates, right? Because in these updates, yeah, you can see over here, I always start giving you share with you what are the updates of the what happened on the previous day, right? So market update for today, December 12th, Wall Street edged lower, right? Broadcom decline caused the everything, right? Broadcom fell as much as 5% in after hours, right? Okay, so what are the conclusion? I summarize basically, me and my team actually summarize a lot of things that happened. So even if you are not free to monitor the markets, having this Telegram channel does give you a daily update of what happened the previous day, so that you can catch up on what is happening on the stock market as well, right? And also join our mailing list to get daily action steps, right? In our mailing list, we actually share with you what are the things to take note of and what are the actions that you can take to benefit from the markets, right? Okay, so do join our mailing list so that you can know what are the actions to take to benefit your own portfolio and also profit from the markets as well, right? And most importantly, right, okay, subscribe to our YouTube channel for more videos like this, and most importantly, like this video, right? It gives me more confidence and give me and my team more indication that you want to see and watch videos like this, and we will try to produce more quality content like this for you as well, right? Okay, thank you so much. May the profits be with you, and I will see you in my next video. See you soon.
I hope you loved the video and learned something new from it. If you want to receive more videos like this, hit that subscribe button and ring that bell for notification. And if you want to learn more about the trade to win formula that I use in my trades, click on the link or button around this video to join my next free online workshop. In the workshop, you'll learn everything from finding the best opportunities to making consistent winning trades in the markets. I'll see you on the inside.